The house I was trying to buy needs work. My bank won't finance the house. Yeah, banks do not like financing any home that needs work. If it is not immediately occupiable, then chances are a bank will not want to lend against it, which makes perfect sense from the bank's perspective, but it puts investors in a tight spot, especially if you are just getting started. So I think if you are attempting to buy a property that needs work, the ways that you could possibly do it are cash, seller financing, hard money, or private lending. Seller financing is the one you referenced. If this seller isn't interested in doing that for you, if it turns out, then the other three options are about the same: hard money and private money. Hard money and private money are very close to being the same thing. However, I think the key difference is hard money. They're going to charge you points. It's going to have more of a company style feel. They're going to want to do their own due diligence. They're going to have you maybe even do some appraisals, some inspections, perhaps. They're going to want to look over it. They're going to do their own due diligence as far as the after repair value, the purchase price. They're going to analyze it themselves, figure out how much rehab it needs, because in the event that you do not come up or if you default or don't do the things that you say that you'll do, then the hard money lender, they're going to need to step in and either finish the work or find another investor to kind of pick up where you left off. So I think for that, it is going to be a little bit more expensive. They're going to charge you points. So, I've heard as high as 5 points being charged. So if you're borrowing 100,000, you might have to pay $5,000 just to have the ability to use that hard money loan. Private money, I would say this is somebody that you personally know. This is a friend or family member. Their money is still going to be secured on the first position mortgage, but they're not necessarily going to ask for all of the documentation that the hard money lender would. They're going to be mainly concerned with the relationship that you two have, and they're going to just inherently trust you to do all of the right things. And in the event that you don't, there is that first position mortgage where they get the property. However, most private lenders are not interested in taking possession of that property in the event that you default. So that's the only separation. It's a small one that I have between hard money and private money. And then, of course, there's the option of you doing it in your cash. So if that is not an option for you, if you don't have enough money to do the purchase price and also fund the rehab costs, and when I say cash, I don't necessarily just mean money sitting in your account ready to be deployed solely for this purpose. I'm including, like, let's say you had the purchase price, but you did not have the money to rehab it. If you had a line of credit or a credit card and you were able to do the rehab or buy the materials utilizing those funds, then I am also including that under this categorization that I just kind of made up in my head of cash. So I think those are the options for you as soon as banks are out of the picture. Each of those have their own pros and cons. If you are using your own money or private lending, then I would say the timelines are a little bit more flexible. I know when we work with kind of hard money or hard money lenders, there's generally a pretty short timeline associated with it. So we've got one lender who is only interested in 6-month loans. I think he gives us an option to extend to like 8 or 9 months if necessary. But for the most part, it's 6 months. That's a really tight timeline, and it really requires you to hone in, focus, and make sure that everything goes right. So that, I would say, is one of the drawbacks, along with just hard money being very expensive.
Thanks for watching that clip. I thought that was a good question. And I think you can ask good questions too. Join us every Friday morning at 8 a.m. Eastern Standard Time for a live stream Q&A where we answer plenty of questions just like this one. In the meantime, consider subscribing to the channel if you want more of this content. And if you want to increase your deal flow, analyze properties better, and help me feed my family, click the link below for a free 7-day trial of PropStream.